Hello and welcome again. This is Robert Schein, Managing Director and Partner of Blanke, Schein Wealth Management. Today is July 20th, 2021. We're going to talk about three topics, moving markets. So let's get right into it. Thanks for watching. So today was a pretty historic day. We had our second space traveler of recent few weeks back. We had Richard Branson and today Jeff Bezos. Both have been basically a race to space travel and all of the sort of benefits to technology and innovation from the private sector that will be providing every aspect in every industry to years to come. If you recall, the space industry that was funded by the government years ago, U.S. government, everything that came out of it, whether it was trial or error, it was the innovation and that race to space for space travel as well as to the moon back in the late 60s. And eventually the United States actually did it. That being said, we have another round of innovation, but it's funded by the private sector. Again, all of the billionaires out there, from Elon Musk, who's now next on deck, all eyes are on him because Jeff Bezos did it successfully this morning. My take-home point is, and the broader picture here is that don't ever bet against American ingenuity. Ultimately ingenuity or technology for that matter, as it relates to markets and the spirit of competition. Right? So you have no different than, let's call it the reopening strategy, right, of America. You have two businesses, they're both competitors, and they're both perceived leaders in their own industry. And the CEOs and the executive management teams are all thinking about how to reopen safely and capture business and make up for the lost time, but more importantly, grow market share. And you know, that's the same thing with a competitor across the street. That's the American spirit of capitalism, ingenuity, and ultimately what is going to fuel the markets of tomorrow. Everything from space travel to just, you call it financial services industry, and every industry as a result of that. And that's the essence. When I went to Wharton Business School back in the day, that's one of my professors said, don't ever bet against American ingenuity. And we're seeing that play out again with the space travel example I just gave you. But ultimately, let's look at yesterday. Markets were overbought, and now they ultimately had a flush on all three indices to become oversold in a lot of them. So think materials, energy, and industrials. Those are three sectors that were really, not just yesterday was a flush out in terms of a big drawdown, 2.5% specifically on some of the indices. Today's a big bounce back on those. So technically speaking, we had the S&P hit the 50-day moving average, but bouncing. It's done that every time this year. And now obviously we saw 10-year Treasury once again trying to steal the headlines and go to an all-time low today in trading. And what is that ultimately telling us? Well, there's a lot of market manipulation behind the scenes. And there's a lot of sort of fear on the horizon of what the Delta variant will and can do on both here and a global basis. And ultimately, is it going to be something that shuts down the world again? Probably not. But more importantly, the concern would be for CEOs as they go into earnings season and reporting right now. How much guidance will they provide? And I will bet you what's going to happen is most CEOs are going to use this opportunity or particular risk on the horizon called the Delta virus as a opportunity for them to temper expectations on a future earnings, the future quarter. It's real easy for a CEO to say, I really can't tell what's going to happen on a go-forward basis, so we're not going to give you forward guidance. And if we do, it's going to be on the lower level. Ultimately, Wall Street will take this from the earnings reports and what the CEOs say, or maybe not say, if you will, and then they're going to ratchet up or down, most likely down their third quarter estimates. That's the biggest setup. Watch what's happening right now. The setup's going to be the CEOs are going to manage expectations, right? They're going to guide down lower when they report so that they can beat those expectations and they look like heroes. Wall Street will fall in line with the CEOs and ratchet down their expectations. Market might have more turbulence to come based upon these last couple of days. I suspect maybe a few weeks to come based upon listening what the CEOs say. But that sets up for a higher market later on this year as a result. Because what happens in the third quarter, you get into October, November, December, and the reporting, and all of a sudden, oh my goodness, the CEOs were way too conservative, and more likely than not, We will see how this plays out, but my prediction, my personal opinion, is that this is a setup for a year-end rally from the third quarter as CEOs report in the second quarter and give their forward guidance, which I would suspect, because of the variant, because of all the other aspects, supply chain constraints, globally speaking, we're going to have them talk down the book. It's basically Wall Street 101. But what we do is strategically rebalance. We took advantage of the market yesterday. Across the board, when markets are down, we take advantage of them because we're believers in long term. Again, we're not going to bet against American ingenuity. That spirit of competition, when we reopen, is going to have one business versus the other business start to compete to grab market share. And what happens, what ultimately really is the net result of that? Driving earnings. Earnings drive markets. Markets will rise higher because of earnings. And that's sort of a high level overview of simplifying it, just to see what's going to happen. The spirit, the annual spirit of the market will ultimately, from this point forward, we believe, grind its way higher. But obviously, there's always going to be a wall of worry and uncertainty, and that's where our opportunity really lies for our clients ahead. So, that's sort of my perspective on today's day. It was kind of exciting to see how it plays out. And that's about it. That's our update for today. Thanks for watching, and we'll continue to report the news as we see it. But more importantly, if you didn't have an opportunity to tune in last week in my mid-year outlook, one of the key highlights, we have a replay for you, a replay link, and we'll include it in this email as well, the replay link for last week's mid-year outlook. Hopefully you got to see it. In that 45-minute presentation, I did set up that we will have more volatility. And, 3 or 4 trading days later, we got more volatility. There's a couple other key components in there that I wish, if you have some time, please listen to it and watch it if you will, at your leisure, maybe this week or later this weekend, because they're really setting up what we believe is stuff to pay attention to on a go-forward basis and how we're taking advantage of that for our clients at Blanke, Schein Wealth Management. So thanks for your time today. Take care, and we'll see you next time.